Hi there, welcome to Kneppy Invest and welcome to another answer and reply video where I get to answer your questions and reply to your comments to the best of my ability. And I always say this, sometimes my ability is severely lacking. Now, to start off this video, I'm going to go back to last week, a comment or question from Trader Hooper who mentioned, have the reactions to market reports been more extreme this month? I don't remember so many moves of 20% or more in the past. A few other comments saying, just acronym said, market swings during half-year reports in February were equally violent. Stu Percy also says, I also think a lot of companies are all-time highs. The indexes are all-time highs. So if a company doesn't beat expectation, it just gets punished harder than usual. Interesting enough, there was an article in Livewire about this exact thing. And I didn't know the answer. And I'm not saying this is the answer, but the article was titled, 3 Stocks That Shape Reporting Season and the Lessons for Investors. They just went through the winners and losers, including CSL and James Hardie, the biggest losers, Zip, Super Retail, and Aussie Broadband among the best performing companies. In fact, according to this, they were the 3 best performing companies on release of the results. Now, what was really interesting about this particular article is the parts titled, Was August 2025 Really That Bad? Now, I won't mention who wrote this, Vishal, because his last name I cannot pronounce, so we'll just call him VT. Anyway, so was August 2025 really that bad in terms of volatility, in terms of extreme reactions? And he starts this part off with, here's the odd part. On the numbers, this reporting season was fine. Morgan Stanley notes that beats and misses were evenly split, with beats outperforming the market by 2% on the day and misses underperforming by negative 1.7. In fact, this was relatively less volatile than previous seasons, and they've broken down into half-year reporting months, so February and also August, over the past 10 years. And based off this, nowhere near more volatile than what we have seen. And yes, February seems like it was the most volatile month in terms of positive reactions, 4.5%, negative reactions 0.3. But in August 2016, negative reactions negative 5.2 and positive 2.9. So he also asked here, so why did it feel like a bloodbath? So I suppose Trader Hooper is asking this question. And the answer, I don't know if it's an absolute answer, I doubt it, because the names that blew up were the big, well-owned portfolio staples. When your anchors crack, it rattles confidence across the market. Yet despite the carnage, the ASX 200 has sailed past 9,000 with a cohort of smaller but mighty winners doing enough heavy lifting to push the index to fresh record highs. So maybe that is the reason why we thought that maybe this was a more volatile reaction in the market than what we have seen in previous years. There you go. So thank you for that live wire. And thank you again, Trader Hooper. Okay, now we got to go to this one. This is not really a question, it's just a comment with 8 thumbs up. So I'm going to pay attention to this. I did mention last week that I'm thinking of doing a technical analysis series, and because you have 8 thumbs up for this particular question, I suppose, or this particular comment, I'm going to have to do this. I'm thinking about it, and now I'm really going to have to think about it. I won't start now because I'm going away, but maybe in November, December, I will start doing a technical analysis video series. So thank you for this comment, Pretzel Pieces, and a few other comments here as well. So there you go. Also mentions, I'm here just for the investment and market insights. That's the only thirst I'm looking to quench right now. These pretzels are making Kneppy thirsty. What type of pretzels though? Like in America, I remember eating these really soft pretzels, not the hard pretzels you get like you buy in a shop or something. Anyway, Bill Cassim. Hey mate, can you look at RML? Try and remember what this was. RML, yeah, here it is. Resolution, I'm not saying Resolution Mining, but that's a gold company. Resolution Minerals. And Bill asked, can you look at this company? They've just started drilling at their Horse Heaven project, and Snow Lake has just made $225 million offer to purchase project, 3 times the market cap. I do remember this, and I was thinking, wow, this particular offer is significantly more than the market cap of the company, and the market's not really reacting as much as I thought it would. That was my initial thoughts. I won't go through the rest of this particular question because I went back to this company and then I noticed update on Snow Lake NBIO parties not proceeding, released on the 25th of August. So based off this, and the share price on that particular day only dropped 3%. So it seems like the market knew this was going to happen. I have no idea. But this particular announcement just mentions that notwithstanding the red flags, due diligence completed by both parties to date did not identify any material issues. They have mutually agreed not to pursue the transaction proposed under non-binding indicative offer, as the parties were unable to agree commercial terms to move forward on a transaction. So they also mention here, the company notes that the Snow Lake's $225 million offer for Horse Heaven was structured at the asset level rather than at a company level, and as such was not a tax effective for the company or its shareholders. In addition, the predominantly script-based consideration, including pricing and escrow conditions that were not attractive to the company, rendered the offer less attractive. The company would have preferred a significant portion of the offer to be cashed base. Okay, so I was really intrigued by this particular comment from Bill Kassem, and I'm no longer as intrigued because of this particular comment. But thank you for your original comment, Bill. Thank you for that, because I actually did remember that. And at the time, I was thinking, wow, this is a massive offer. So why isn't the market as excited? By the way, the chart for RML, you have a look at this chart for RML, which sometimes I will look at, sometimes I won't. The chart was looking pretty good, and then the share price dropped a fair bit on the 6th of August when they actually announced, 6th of August when they actually announced this. So share price was running up significantly beforehand, and then the share price dropped. And again, so it looks like, the share price actually almost reached a high on that day, and then actually started to drop. So a very interesting reaction from the market. Pretty sure it was the 6th of August. Yeah, there it is. 6th of August, unsolicited $225 million offer received for Horse Heaven project. And it just seems like the market went, nah. Don't listen to Albo says, well, when it comes to, I'll tell you this much, when it comes to this 5% deposit for first home buyers or something, I think that is a horrible policy, and it's just going to increase prices even further. As a homeowner without a mortgage, I'm loving it. But I should not be loving it. I should not be loving this sort of thing. It doesn't address supply-demand issues. Well, supply issues. It only increases demand. It only increases demand. And the whole problem with the housing market right now is the governments, either side of the spectrum, all they do is fueling demand. That's all they're trying to do, fuel demand. And the reason they're doing this is because they own a lot of property themselves. And that is what they're trying to do. Look, we're being really helpful, but we're going to drive demand and we're not going to do anything when it comes to supply. Anyway, so let me get me started on that. In fact, I did do a housing rant video, which will be released in the next 2 months. Anyway, whole reason, this is a good comment because he mentions that McMahon is a civil construction contractor. And funnily enough, after a while, I realized I wasn't thinking of McMahon. I was thinking of another company. I think it was called Mastermind, really small company. And I'm pretty sure they're like only into coal. And that's a fairly small company. But I have to agree with, don't listen to Albo here. I'm not at all interested in civil construction contractors. He mentions low margin business. Yeah, very low margins. And if contracts are lump sum, can be risky. Yes, so I have no desire to even think about buying civil construction contractors for the long term. Maybe for the short term, but not the long term. By the way, the chart for this one does look pretty good. So for me, this is more of a trading stock, but not for me. But thank you for that. Thank you for that. Okay, a couple of comments in regards to Sonic Healthcare and Healius. So just in acronym says, Sonic Healthcare makes no sense that brokers are expecting huge EPS growth, given this is a slow growth company. Looking at results of the last 10 years, excluding COVID testing. We can do that. Let's do that right now. And if I do that right now, I'm going to have to bring in Physical AI, look at Sonic Healthcare. And what I'm going to do for this company is I'm going to go through what I do for all companies. And the first question is Sonic Healthcare high quality? And let's look at some simple financial metrics. Now, in my opinion, this is not the end of the story. Just because it may not satisfy a few of these metrics doesn't necessarily mean it can't be high quality, but I think this is a really good starting point. So this is using my rule of 10. Looking at revenue growth over the last 5 years, 7.1%. In fact, if we look at revenue growth, 10, 5, 3 years, or below 10%. In fact, it does look like it's slowing down. Now, this could be affected by COVID-19 because this company, if you have a look at the revenue, massive revenue growth would be in 2020, 2021, and it has fallen. Earnings per share growth been negative over the last 5 years. Dividend yield, don't really care. Payout ratio, 100%. Ooh. Gross margins, 33%. Operating margins, 9.7%. Now, this is a 1-year sample. It's not a 5-year average, but if this was like a 5-year average, that would be another mark against Sonic Healthcare as a high-quality company. Return equity, 11.8%, and return invested capital, 7.9%. So actually, Sonic Healthcare is nowhere near, does nowhere near get close to being a high-quality company based off my criteria. Revenue growth is not there. Return invested capital, not there. Gross or operating margins, not there. P ratio, 22.3. Don't really care right now. So for me, Sonic Healthcare is more of a trading stock at this point in time. It needs to prove to me that it can be high quality. And if we have a look at their financials, revenue, you can see, yeah, nice growth, 21, 22, and then pull back 23. But it has been growing over time, but not as quick as I would prefer. Not as quick. By the way, I'm going to have a look at gross or operating margins just to see what they've been. Got as high as 20% in 2021-22, but a lot of tailwinds behind the company. But if you take that away, and we'll get rid of revenue here so you can see it. If you take that away, yeah, operating margins prior to COVID-19 were above 10%. So that is good. I don't mind that. And over the last 2 years, they've been below 10%. Anyway, so Sonic Healthcare, by my estimations, by my criteria for high quality, is not a high quality company. So that means I'm more willing to trade it. And let's have a look at a chart for Sonic Healthcare. And share price has dropped a lot, $29 down to 24. That happens when they release bad results. Weekly chart. Now, prior to COVID-19, prior to that 2 really good years, you probably might have said or called this company high quality, and things have gone a little bit pear-shaped over the last few years. So how much longer will this continue? Will these bad times continue? Share price is at a support level right now. And the reason I say that is it's very close to the lows the company saw back in, when was that? May 2024. So put a line there. It's at support. Look at it. Look at what it's doing. It is holding above that support level. So that's the only reason why I'd be interested in Sonic Healthcare is just a trade. And you could say low risk trade here. You buy in now at 24, and if share price drops much more, that would be a breakout below the support level, and you just sell at a small loss. But maybe the share price will rally. So this could be a nice little technical trade, low risk technical trade. In fact, I'm writing it down. Okay. Now the other question in regards to Dev Shaw says, thanks for answering question on Sigma. Do you think Healius could be a potential takeover target for Sonic? Actually, irrespective of this, I believe Healius is a bargain buy at the current price. What are your thoughts on Healius? In fact, we'll do the same thing for Healius as we've just done with Sonic Healthcare. Could there be some acquisition, what do they call it, mergers or M&A in this space? Sonic, Healius, and there's also Australian Clinical Labs. Funny enough, I'm pretty sure Australian Clinical Labs had a good reaction. Their results had a good reaction from the market. Let's have a look at this chart. Well, there was a bit of a positive reaction, but not much. The chart still looks pretty negative. And we'll just have a look. Actually, no, before we have a look at Healius's chart, so I have no idea. I'll be honest with you. I never use potential merge or M&A as a reason to buy into a company, because sometimes I just don't know. I'll be honest with you. Sometimes I just don't know. Anyway, so I actually have heard people say or use that as a reason to buy into a company. In fact, RPMGlobal, I own shares in that company. And I heard an expert say a few years ago, one of the reasons we bought into this company is because they are a potential takeover target. And I was like, oh, really? Okay, that's interesting. That is interesting. And funny enough, I'll talk about RPMGlobal and takeovers towards the end of this video. Anyway, so Bargain buy at the current price. So let's delve into Healius, and I'll do exactly the same thing as I did with Sonic Healthcare, and I think we are going to see the same thing. Here, where is it? Healius, HLS. Okay, so revenue growth has been negative over the last 3, 5, 10 years. That is a massive red flag for me. I always want to see revenue growing. Earnings per share over the last 5 years actually up 13%. Over the last 3 years, down 26%. That's probably because of those tailwinds that turn into headwinds, sort of. No dividend. Gross margins 28%. Operating margins got 0% there. Return equity negative. Return invested capital 3.3%. Apparently the PE ratio is a negative 1.1. Forward-looking PE ratio about 27.7, with a price target of 92 cents. Was there a capital return recently with Healius, or was that Helia? I sometimes get Healius and Helia mixed up. Anyway, I'm pretty sure Healius is the what do you call it? The pathology company. Yeah. Anyway, it is without doubt, because yeah, without doubt. Okay, so yeah, for me, this is more of a trading stock. I'm not even sure if this company would be good value. In fact, let's have a look at the most recent results. I'm assuming they released results. Healius has a market cap of what's that? Healius has a market cap of 800 million. 624.5 million. Okay, 624.5 million. We'll have a look at their results. Now, I'm wondering if they were not profitable. So revenue 1.34 billion. EBIT, what's happening here? Reported. So a pretty big loss, but that's just reported. It's not underlying. Underlying EBITDA 239.3 million. Underlying EBIT 17.1 million. Oh, they sold something for 375.2 million. Okay. I'll be honest with you, I just have no idea. I have no idea about this one. I'm just watching a plane land right now because I know someone on this plane. I'm watching a live feed from Sydney Airport, and they flew from Port Macquarie to Sydney. I just watched their plane land. That's awesome. It's really windy. It's really windy. It's really interesting to see how the planes deal with wind. It can be quite volatile. And funnily enough, I just lost it. There we go. Went snap. And it was supposed to land at 11:20. It's 11:14. Yeah, so it's a little bit early. 6 minutes early. Anyway, so that's me just watching planes land. I've got it on the other screen. Okay, that's why sometimes I was just looking to the side. Okay, so for me, here, I just don't know about this one. I don't know how, personally, I don't know how I would classify this company as cheap or expensive because they sold something off and I just can't do it. So share price dropped a lot on the 9th of May. Did this company, share price actually looks like it did rally a little bit after they released results. So it fell 14% on the 21st. They released results on 21st. So there was an initial negative reaction and the share price has rallied since then. Now, for me, this is more of a chart thing. So that's how I would play. Personally, that's how I would play Healius because I just don't know how to evaluate this company right now. Is $600 million good value? I just have no idea. HBK Fortis. Hey, Kneppy, any thoughts on AL3? Is that AML3D? We'll have a look in a second. If price pulls back to below 20 cents, it's probably worth a buy. I got in at 15 cents. So this is all about the chart. That's it. Only about the chart. Nothing else. AML3D. Just looking at the chart here. And this is a daily chart. Share price went on a massive burn back in, or run back in July 2024. I believe that was on the back of Next Investors recommending, and that was sort of the breakout for the company. Fair bit of volatility in this company since then. Share price got as low as about 10 cents, 10.5 cents back in March, and then went a nice little run again back in June. Don't know why. Share price trying to pull back again. I do like the volume we have seen since June. Now, a little bit of volume on this pullback, but it has been decreasing. Now, the share price did go up on Friday by 8%, but that was on fairly low volume, so I can't really draw anything to that. Now, I would expect that this company is more of a story stock than anything else. And when I say that, I mean the company's not profitable, not generating cash flow. So you have to know a lot of things about the company and hope that they start increasing their revenue, become profitable, become cash flow positive. Maybe someone acquires them, something like that. What's the market cap of this company? I'm assuming it's fairly high. I'm going to guess $200 million. $148 million. There you go. So for me, yeah, I could see this going either way. But again, this is going to be driven by sentiment. It did get to almost a double top here, and we have seen the share price pull back. I could see this actually going on another run if we start to see some volume coming in, which could be on the back of a pretty good announcement. Maybe they release another good announcement, or maybe Next Investor sends out another email recommending him or something like that. Now, if the share price drops below 24 cents, that was a low we saw on Thursday, that would be a slight red flag. And the reason I say that is if you go back through time, that level is quite important. Oh, what? Well, I've put in the wrong. I want to put in a line. There we go. There we go. So that line right there. And the reason, like we'll say around 24 cents. I mean, it's not an exact price. We could say between 24, 25. The reason behind that is because if you go back to November last year, the share price hit that level twice and then pulled back and got through that level in fact, we'll have a look. There we go. And got through that level 24 cents on the 7th of July on huge volume. So it needed a lot of volume to get above that level. And then it held firm above that level and went up, came back, almost got to that level again, and actually did bounce off 24 cents on the 28th of August. So for me personally, that's the important level right now for AML 3D, 24 cents. Goes below that, that will be a little bit concerning. But another possible low risk trade, you buy it like at 24.5 cents if it does go down there again, and then sell if it breaks below that level. Thank you for that, HBK Fortis. Okay, pretzel pieces again. I've recently heard that Canva may list on the NASDAQ by end of year. It got me wondering whether you have short list of privately listed businesses that you're watching and may buy into if they IPO go public. For example, if Canva does list, would you buy in? Now, I do have a rule. This is just a rule I have. And I do actually believe that having rules is quite important. Having rules, processes, a plan is quite important. And for me, one of my rules is don't buy into IPOs until I'm either looking for financial results to see how they're performing, or if I see a profit upgrade. Now, if I see a profit upgrade, I will trade that company, no problems. But I do want a little bit of history before I buy into a company for the longer term. So IPOs are more of a trading stock than anything else. I just need a little bit of history. That's the way I do it. That's one of my rules. And so I don't have any sort of list of privately listed companies. Now, one of the reasons behind this is a lot of times you will see IPO share price drop a lot until you see a little bit of proof, a little bit of history. Now, sometimes it goes the opposite direction. And particularly for large tech companies, we have seen those companies just go on massive tears after their list. But for me, one of my rules is don't buy into IPOs because it can go pear-shaped. Thank you for that, pretzel pieces. Jake Chard, can you please cover Adore Beauty and Kogan, both updated today, both updated today. Adore up 11% on store, roll out store strategy. Now, I have not looked at these results in depth. In fact, very quickly, I looked at the results. The main thing for me about these companies is just the reaction from the market. The reason behind that is I don't consider either of these companies to be high quality. No, I don't. Adore Beauty, however, if I remember correctly, I was slightly impressed by this. I did actually like these results on my first glance. Now, sometimes on my first glance can be deceiving, and then I go back and go, oh, wasn't that good? But on my first glance, I thought these results were pretty good, particularly Yeah, just by looking at this, margins up, EBITDA up a fair bit, EBIT up. So revenue up wasn't up all that much, but the margins did increase. And that's the impressive thing in regards to this. Targeting group EBITDA margins of 5 to 6%, so came in at 4.1%. And EBIT margins of 2.5 to 3.5%, up from 2% last year. So this company looks like it's seeing an increase in margins. That's nice. And the other thing that impressed me was the trading update. Strong start to trading in the first 7 weeks, up 9% over previous corresponding period. So if they can grow the revenue like at 9% and increase the margins, that would be a really good year for Adore Beauty. So even though I would not consider this company to be high quality, it definitely is on my radar as a possible trade. Oh, they had a nice table. Should have just gone to the table. Anyway, so let's just have a quick look at this chart. And I'm pretty sure this chart was looking good. It came up on my radar not that long ago. Yeah, this chart looks really good. It's really broken out. So we started to see a bit of a shift in sentiment in this company just before they released results. So this jumped on my radar probably, start of the month, start of August. Share price was 80 cents, and then you can just see the share price taking off. A bit of a pullback, a little bit of selling has come in, which is understandable. Now, if you go back and look at the weekly chart, share price has dropped a lot since they listed, but this could be the turnaround. This could be the turnaround for this company, even though I would not probably consider it to be a long-term hold. This, I wouldn't say it reminds me of Temple or Webster, but could it be sort of like the next Temple or Webster, even though they're completely different companies? The reason I say that is if you go back to Temple or Webster, share price now $26. But if you go back many, many years ago, you can barely see it. This was a horrific IPO. So they listed back in 2015. Share price went all the way down from 95 cents to a low of 10 cents, maybe, or not quite. And I still remember this. I still remember the breakout in Temple Webster in July 2017. The breakout occurred just above 20 cents. And I was thinking, in fact, I saw this, but I was learning technical analysis at the time. And I saw this and I went, oh, I don't know. I don't know if I like the company. It's one of the reasons why, even if I don't like a company, I don't understand why people buy furniture online. I still don't understand it. But just because I don't understand doesn't mean the company can't be successful. And this company, since then, that breakout, what a breakout that was. Now, it wasn't on massive volume, but a huge breakout for the company, and the company's just gone. You can barely see that down period in 2016 on this chart. Now, a lot of volatility, but look at that chart. So could this be the next sort of Temple Web? It could be. It could be. And this could be the breakout. What we have just seen could be that particular breakout. And look at the volume. Huge volume has come through. That was a weekly volume. So massive volume has come through. Funnily enough, the biggest volume was on Thursday, not when they released results. That could have been just someone coming in, like an index manager or a fund manager coming in, buying a lot of shares, but that's okay. That's what we want to see. Okay. I'm going to see. I was just wanting to see if that person texted me because I told him I'd be watching it. Okay. Kogan. I'm trying to remember what I thought of Kogan. It didn't do anything to me or for me, if I remember correctly. I had a quick look and moved on to the next one. So for me, this was a meh. It wasn't like massive, wasn't great. I'm trying to remember what I saw here. Yeah, I don't have any thoughts about this one just yet. I might have a closer look. Well, haven't got much time. Might have a closer look in the next few months. But for me, again, this is more of a training stock. So let's have a look. And I don't think this one popped up. No, this one didn't pop up. So for me, this is more of a training stock, and yeah, nothing there right now. So I have to have a closer look at the results, but it didn't really do anything for me, and it looks like it didn't do anything for the market. So thank you for those, Jake Chard. JHBZ6TH. Hi, Kneppy. There is some rumors saying Warren Buffett selling lots of shares and keep cash, and some people says the current market is too high. What is your thoughts on this? Thanks. Well, I wouldn't say they're rumors. I have seen a lot of articles about this. But then again, I've been saying a lot of articles about this for the last few years, and I'm pretty sure Warren Buffett is setting aside. Now, this is Berkshire Hathaway, by the way. Some people say the current market is too high. Yeah, there's been a lot of stuff about this as well. But the market can remain irrational for a long period of time. Now, I actually did Google. What I did, I Googled it. I Googled Berkshire Hathaway cash levels, and there's quite a few articles here. Like 6 days ago, Warren Buffett sends investors a $344 billion warning. In January, this chart could explain why Warren Buffett is holding lots of cash. What Warren Buffett isn't saying speaks volumes. Cash on hand. Oh, no, I'm trying to look for articles. There's also videos. 1 day ago, FinTech, Warren Buffett just sent a hidden warning. Buffett's cash pile just got even larger, 20th of June. Warren Buffett explains cash pile and why it's growing, etc., etc. 3 months ago on Reddit, cash stack isn't fair, it's strategy. Yeah, I actually agree with that. So, Statista, Berkshire Hathaway cash pile, an ominous sign, question mark. I actually went to JetGPT and I just wanted to ask some questions. My main interest about this was, I'll show you this question in a second. And for some reason, you can't see what I asked. The levels of Warren Buffett cash concerning it. Didn't really understand what I was talking about. They're strategic, yeah. But I was saying concerning in terms of market, so I should have been more clear to ChatGPT. Now, the sections in this particular answer: historic cash hoard, why Warren Buffett is sitting on cash. It adheres to his classic mantra, be fearful when others are greedy. Rising valuations and market over-exuberance have prompted a defensive stance. These valuations are at levels seen before major market downturns, 2008 and 2000. Cash acting as a buffer allows Berkshire to respond quickly to distress opportunities. I've actually heard someone be critical of Berkshire Hathaway and Buffett in 2020. Remember, there was that really rapid V-shaped recovery, and he was on a pile of cash then, and the criticism was he didn't react. But that was really unusual. When we see that sort of, we don't see that sort of V-shaped recovery. Now, in significant downturns, the bear runs continue they usually go for a year, maybe even longer than that. Not a sign of panic, but of patience. Yeah, I actually do agree with that. It's not like the market is going to drop tomorrow. It could drop next year, 2 years from now. It may keep on rising for 5 years. Anyway, I asked it, but the thing that really intrigued me is Berkshire Hathaway cash levels leading indicators for a crash. And I wanted to see if there was any research done on this. Now, ChatGPT does have, what is it called? Does it call it a Scholar GPT? But that takes ages, so I'm not going to do that right now. Anyway, is Berkshire's cash a leading indicator of market crash? Yes, in a sentiment and valuation sense. Now, Buffett's cash builds up when valuations are stretched, opportunities are scarce. This happened in 1999 and 2000, 2006, 2007, and he did build up his cash in these periods, or leading up to these periods. He actually did build up his cash. Not a precise timing to, again, we just don't know. We have no, it's very hard to time anything. For instance, in 2008, he waited to deploy cash after Lehman collapsed. 2000, Buffett avoided .com stocks, but the market kept rallying for months before the crash. Yeah. So he doesn't know when the market's going to crash. It might not crash at all, as I mentioned. Cash levels can remain high for years without a crash. Between 2017 and 19, he had $100 billion in cash with no crash occurring until COVID hit in 2020. No consistent correlation between Berkshire's cash level and short-term market movements. I wouldn't expect there would be. It's more of a safety stance than a countdown clock. Anyway, so there you go. And let me answer some of these questions. So no rumors. I think he is building up his cash. Some people say the market is too high. Well, it depends who you ask. If you ask Stephen Van Meter, he would say, let's have a look at these recent Stephen Van Meter YouTube. Let's have a look at some of his most recent videos. Domino's, worse than 2009. Domino's can't sell even pizzas. Something is very wrong. You're warned. it hits tomorrow and you hate it. McDoomed, and it just keeps on going. It's begun. This frightening indicator reveals imminent housing crash. Walmart drops bombshell. We're screwed. Out of cash. Urgent alert. It's every single day. It's a new where the market's going to crash. And he's been doing this for years. So it all depends on who you ask. There are definitely indications that the market is overvalued. Definitely there are indications, but the market can remain overvalued for a long time. It can remain overvalued for the next 3 years. And if it keeps going up and it becomes even more and more overvalued, I do think eventually we will see a fairly big correction. The problem is we just don't know. Anyway, so let's go to the next question. Okay, happy now 18. I don't know what's worse, owning a share that Kneppy goes, why would you even own this share? Or makes a groaning noise. The chart looks horrendous. LOL, thank you so much, as always, for everything you do. 8 thumbs up. I'm going to actually make you feel better in a second. Oh, this is about Mosaic Brands, is it? Yeah, Mosaic Brands. I actually did own Mosaic Brands for a period of time, and I thought it was really cheap, and then I sold out not quickly, but I did a little bit of research on it. I went, ugh, I didn't like it. Now, in saying all this, I actually do own a company in my super. Actually, it's not in my super. It's actually in my superhero. And this company, I'm down 99%. I won't show you my account. I'm doing on my other. I can't even remember what it's called. This company is called. This company is called XTC Lithium. XTC Lithium. It's 0.1 cents. Now, I bought some shares and then I didn't sell. And you can see that's been suspended for a while. In fact, I can't remember the last time they were trading. Maybe 2 years. I don't think this company's coming back. And in Superhero, my shares in this company are worth, I am thinking like $1.75. My shares in this company are worth 75 cents. I have 750 shares at 0.1 cents. So, yeah, I'm down 99%. There you go. So I think it's very useful to have these horror stories of companies you bought. I don't even know why I bought this one. And I just kept on holding it. Don't know why. And I'm leaving this in. Well, I can't sell it because it's not even trading. But why would I sell it? Because if I sell it, the broker fee would be more than how much shares are worth. Anyway, so we all have horror stories. Now, this particular answer, in regards to XTC Lithium, this particular answer not only was to make Happy Now 18 happier, was also in response to, if I can find it, VB Ed. And I must not have VB Ed. No. So VB Ed was just mentioning, who was it? Oh, Peninsula. Peninsula, that's how I can do it. Peninsula. Here it is. Yeah, I was supposed to have hearted that. Yep, so very embarrassed to publicly admit this. I own Peninsula Energy shares. And fun enough, at one point in time, I also owned Peninsula Energy shares because I thought uranium, they have a project in Wyoming, and I thought this company should be able to become significantly bigger because they have everything going for them. This was a start or just before the uranium boom. So I bought a few uranium companies and then I got out fairly quick when I realized I did not like the management of this company. So, yep. Anyway, let's go back to response status responded. And oh, the Hebs replies to that as well. And Just Acronym says, buy more while it's cheap. Now, there is a potential that the worst is in for Peninsula Energy. There is potential. But I actually was thinking that a few years ago, and it's still getting worse. So, yeah, and look, VB had said, there is no point in me cutting my huge losses and getting out now. Crossing my fingers that when the company starts selling its yellow coking. Yeah, so that's the same thing with this other company I own. There's just no point selling. And I probably actually agree with VB Ed here that what's the point in selling Peninsula now? Because this could be the low. This could be the low point in the company. It could be. May not be, but it could be. In fact, I'm probably more likely to buy. No, I won't say that. Okay, so let's go back. Motivational Flavio says, love the Aussie broadband pump today. Well deserved. Now watch it go down 5% tomorrow. Let's see if it did go down. Let's see Aussie broadband's chart. Now, I have a feeling I like this chart. Yes, share price rallied a lot. We have seen the share price pull back a little bit. That's fine. I don't mind this. In fact, I think this is very healthy. You can see a massive decrease in volume. So we haven't really seen a rush of sellers coming in. It's been just a slow dribble of sellers coming in. And if the share price can just go sideways for like 5 days, a week, I think eventually you'll see the share price start going up again. So I have no problem what's happened with Aussie Broadband's share price and volume action over the last 5 days, 4 days after that reaction, after that result. Flying Kiwi. There is a very strong correlation between P ratio and expected returns over the following 10 years. A P valuation of 23 or over historically means between +2, -2 returns over 10 years. So investing in Wesfarmers at a P ratio of 36 is a surefire way to destroy your capital. Probably a lot of the names in the top 20 would fit in that category. Also, why would you invest in the most analyzed and traded stocks in the market? What is your edge? Why not go looking for undervalued bargains? Okay. Yes, I actually do believe there is research done on this. The P ratio, if you buy companies on a higher P ratio than usual, then more than likely your returns are going to be fairly abnormal. I do believe there has been research. I'm digging into my memory on this. And this is true for Wesfarmers. I would not buy Wesfarmers right now. Even though I do think it's at least a quasi-high quality company. And the main reason behind that, it's not the P ratio of this company versus the market itself. It's the P ratio of this company compared to what you have seen in the past. And I'll be honest with you, their results didn't really do much for me. So I didn't really go, wow, this company is doing some amazing. But if you have a look at the P ratio of Wesfarmers, wait, that's not right. P ratio is not 18. But even if it was, it is historically high levels. So this sort of company, if the P ratio high for me, I'd be a willing buyer. But the question becomes, will it? I'm pretty sure the P ratio is, it says 35 here on their main page. And then on their P ratio page, it's got 18. I've seen this now a few times with Fiscal AI. The overview page and their financial page don't align. Okay, so I do agree with that. And I think, valuation does matter. I've actually mentioned previously that matters. I always believe that valuation matters a fair bit, but I'm thinking this little bit less recently that valuation doesn't matter as much, but overvaluation or extreme overvaluation, and I might even put Wesfarmers in that camp right now, because if you compare the P ratio to the growth of companies, it's actually not there. But extreme valuation like Microsoft back in 2000, that was extremely overvalued. Then it actually does matter. But if a company is not significantly overvalued, it doesn't necessarily matter in the long term. And the reason I'm thinking that is a lot of investors look for a margin of safety. But if a company is really high quality, margin of safety doesn't really matter, because I think you're going to be too patient and you're waiting for that pullback in the share price. And the pullback in the share price might not occur for 3 or 4 years before you get a level you might like. And in the meantime, the share price could have quadrupled. So in fact, you're buying at a higher price anyway. So I think valuation matters less for a high quality company, because the definition of a high quality company, well, there's a lot of definitions, but one of the definitions is the share price should, and the valuation of companies should keep on going up over time. But it only really matters if it's significantly overvalued, and then the share price might go sideways for a long time, like Microsoft did for 15 years, and you might not get a return. So I actually do agree with that, but I don't think it's as important. And I absolutely agree with the last bit. Why would you invest in the most analyzed and traded stocks in the market? We don't have an edge. We have the edge in the smaller companies. That is why I do like small caps. I still like small caps. We have that edge. Now, in saying that, I actually also believe that in some of the high growing companies, some of the Mag 7 companies, there is this belief that they're significantly overvalued when I don't think they are. I don't think they are. And because a lot of brokers and a lot of individual investors believe they're significantly overvalued, they won't buy them. And they'll just keep clear and find, and they look for these value companies who aren't growing at all. And I think, I'm not sure that's a really good strategy. Well, it's not a strategy for me. I do prefer to buy into high quality companies, but I do prefer to buy those companies when, hey, they're not, I don't have a massive margin of safety, but I think they're good value. But even if they're not, I'd be willing to take a position. Okay, so a couple of comments in regards to corporate travel management. So Just Acronym says, put your brown pants on. I don't have any. It's about to hit the fan. Corporate travel management says, has found materials errors in financial accounts that could go back years. An issue only discovered the company change auditors from Price Waterhouse after, I'm pretty sure that's Price Waterhouse. Is that Price Waterhouse? PwC. What's PwC? PwC Australia. What's Price Waterhouse? Maybe that's PWH. No, PWH is, what was that? Anyway, I don't know my auditors and my accountants. The brand name for a member firm within the global network of professional services firms known as PwC. There it is, Price Waterhouse. Oh, Coopers, Price Waterhouse Coopers, yeah. Okay, so anyway, there was another question here from, Adrian says, what do you make of the corporate travel situation? On face value, it doesn't look good. A couple of things, they're in suspension. So when I get caught up in these sort of situations, I don't lose sleep at all because there's nothing you can do. Nothing you can do. And I've seen this before when a company has to restate their accounts or something. And a lot of times, nothing really happens. So they went into a trading halt. There it is, a few days ago, more than a few days ago. Anyway, so for me personally, there's nothing I can do. I'm not losing sleep over this. I wouldn't lose sleep over it. And there may not be a significant, we may not see a significant drop in share price. I don't know. There's a chance you won't see much of a issue when it comes to share price. Now, maybe some will think that this is a bit of a high risk situation and the market doesn't like risk. Maybe the share price will drop. But for me, I don't think there's going to be a massive overreaction. I wouldn't say overreaction, but I don't think there's going to be a massive reaction from the market. I could be completely wrong though. Jay Lang says, surely Doug was a contender for the top 5 today also. If I remember correctly, this was the 25th of August. The company released results that they did not release results on this date. Now, I am trading Doug's. So they released their results on the 22nd of August, and then all of a sudden the share price rallied 10% on the 25th. So that is the reason why this company was not in contention for the top 5 stocks, because share price rallied 3 days after their results. Not sure what caused that. Don't know. This seems like it's another delayed reaction. I'm seeing a lot of this. Oh no, the 22nd. And then the share price rallied. Where's my trade history? Oh, that's a Friday. Yeah, 20. Oh no, it didn't. Share price only went up 1.7%. And then the share price rallied the next day. So delayed reaction from the market. So that's why it was not in contention. But let's have a look at the chart. This was one where I was thinking, oh, it's prime for a breakout. So I bought in just after moving average crossover, and then share price was going sideways for ages. Just be patient. Just be patient. And we have seen, I wouldn't call it a breakout. Actually, no, I would. It's broken above my Oh, look at that. It's right there. You could also put another little line right there. But this is a chart that I do like. It also reminds me of Doug back a few years ago. Of course, it's different. But this is when I first took notice to Doug back in late 2022, early 2023, when the share price broke above 63 cents. Then it went on a really nice tear, and then it pulled all the way back to this level. Now it's doubled what it was back then, but I like this chart. I like this chart for Doug. Just Acronym says, suggestion for video bank. How do you find investment ideas in small caps? I actually have done a video on that, and I'm releasing that video. In fact, I might do a video on all my banked videos, my pre-recorded videos that I will be releasing. I won't do a video on I won't mention every single video because there's 101. But I have done a video on this. How do I find, it's a very easy answer, by the way, how to find investment ideas. Very easy. Sensei says, what is the update on your new house build? Also, did you select an IBI? I'm going to do all this after I get back. So my house will be starting to be built very soon when I'm overseas. I told them 3 times I'll be overseas. And they said, hey, we'll like you to meet with the builder, the actual builder, the guy, next week. And I said, I won't be here. I'll be overseas. And they said, oh, okay, that's fine. We'll send you photos. We'll send you lots and lots of photos. I actually said that. I was like, yes, send me lots and lots of photos. Okay, next we have Sanka says, hi, Kneppy. Also an interesting one. Kneppy. I know that's a misspell. Can you please look at Alfabs results which released yesterday and have your thoughts? Thank you. So Alfabs is a recent listing. I think I might have looked at this one really quickly once, the company, not the results. And they are a mining services company. I think they are. They're nothing to do with strengthening your abs, powerlifting. I'm pretty sure they're do with mining services. For some reason, I've got in the back of my mind Hunter. Coal, maybe. I have no idea why I've got that. Recent listing. So whenever I would have opened these results up, and this is what I would have done. Profit up 76%. Well, it looks pretty good. EBITDA up 39%. Earnings per share, 4.24 cents for the full year. By the way, that means the P ratio of this company is like 11, just based off that. Dividend yield, 1.7 cents. So dividend yield probably is pretty nice. 3.2 cents. So dividend yield is really nice as well. So P ratio, or PE just above 10, 11. Nice dividend yield. Nice growth. Can they continue this growth? Now, if this company could grow their profit 76% per year over the next few years, this would be one of the cheapest companies in history. So underground mining hire and workshops, talking about Wollongong, Newcastle, Kurri. Yeah, they've got a lot of stuff in Kurri. Maybe that's why I just think engineering as well. Let's have a look at the about section. Diversified group of companies that primarily operates across 2 divisions, Australia, mining and engineering. Heavy fabricator and site installer of steel structures for infrastructure, and also one of Australia's leading underground mining equipment hire companies. There you go. So on first glance, company looks intriguing. Now, the question becomes, can they keep this momentum going up, moving forward? And if they can, wowzers, because the company would be looking interestingly cheap. Now, do they have any sort of outlook? No, they do not. They have an outlook in regards to capital expenditure. That's okay. Net debt of 20.8 million. Okay. So straight away, let's have a look to see how the market reacted. They released the results on the 25th, and the share price rose a little bit. Share price has gone a nice little run since then. I'm wondering if this chart is starting to look interesting. Share price has gone up a fair bit in the last year, by the way. This chart might be looking fairly interesting. And you can't say the company is significantly overvalued. Yeah, I don't mind this chart either. I don't mind this chart for Alfabs. I'm going to put this onto my list. I'll have a closer look at their results. The chart, I don't mind this chart. Don't mind this chart at all. Thank you for that, Sankar. Giving me a company that I need to do a little bit more research on. HS says, IGL last man standing in the industry, results good, share price down, buying opportunity for me. There was another comment about IGL somewhere here. Here we go. So Jay Langs, can you please run your eye over the IGL results, which saw the share price plunge early but settled down nearly 10% for the day? It has closed below my stop, so I'm waiting confirmation. I'm also curious as to whether you consider today's price action to be a trend killer event. There you go. So IGL, this was on my radar just because of the chart. So IVE Group, share price up 4.6. So share price did drop, and the share price is getting back up to where it started. There you go. Share price getting back up to where it started. Let's just have a quick look at the results. This is another one where I had a quick look, and I can't remember my initial reaction. Now, again, my initial reactions can be way off. Revenue down. I remember this. Yeah, revenue was down. So I do prefer companies who see revenue rising, but I assuming margins did increase. Yeah, gross profit margins up significantly from 46.7 to 49.3. So even though revenue dropped, EBITDA rose 7% and profit rose 21%. So expansion of margins really helped this company. Now, one of the reasons why the share price might have decreased was these results were a little bit worse than expected, maybe just slightly. Did they release any sort of outlook? Yeah, they did. Maybe the outlook was a little bit underwhelming as well. Financial year 26 underlying profit 50 to 54, and that's sort of in where it is now, 52.1. So maybe it was just that caused a little bit of weakness in the share price, but nothing that bad, I would assume. So let's have a little chart for this one. So this one did grab my attention quite a while ago. And the share price, see this. This is an interesting reaction of the market. So there was a fair bit of selling on that day, but the share price rallied during the day, and it has continued to rally. I would not consider this to be a really good trend killer event. Okay, I'm going to add this to my list just to see what happens next. The share price was in a nice uptrend, but we have seen the share price recover. Share price also fell below briefly support level, and then we saw a rally. In fact, it fell below that support level twice in consecutive days, and we saw a lot of buying coming in. That's really beneficial, and that buying has continued. So I think the selling has stopped. Now, I'm not sure if the share price will continue to go up from here. It does look like with this particular high lower than the previous high, maybe the uptrend has come to an end, but it's been a nice little run for IVE Group. And what's the market? The market cap of this company must be really low. Let me just IGL 450 million. So based off that, so 450 million. So the P ratio is not that. P ratio is quite low, like 9, and dividend of 18 cents. So dividend yield's pretty nice as well, 6 or 7%. Doing really quick maths. What'd they say here? 6.2%. Okay, I think I'm going to move on now. I am Ika. Have a wonderful trip. Thank you. 3 days to go. 3 days to go. In fact, 3 days. In 3 days and 26 minutes, I will be flying out of Port Macquarie. If there's another Q&A video before you leave, hey, this is it. This is another Q&A video. Could you explain what indicators or chart setups trigger you to exit short to medium term trades? I sort of did a video on this, a banked video on this, in regards to why I think it was in relation to why I sell when the share price of a company drops 10%. So it's one of my rules. So I don't necessarily look at indicators or chart setups as per se. I'm just looking for any sort of price action. For instance, Ramsay Healthcare. This is a good one. So I was trading this, then the share price dropped, get out straight away. Like this sort of reaction, get out. I don't care what the share price is going to do after that. Just protect my capital in this case. So it looked promising, get out. So when I see the market reaction after results, get out like this. And I don't care. If the share price doubles from here, it doesn't matter. I use this rule for all these sort of setups. And the whole reason I do this is to protect my capital. So I want to protect my capital, grow my capital. Grow my capital is very important, but protecting capital is not discussed as much as it should. Protecting your capital is really important, particularly when you have a fair bit of capital. So for these sort of situations, protect my capital, get rid of my losers. I would consider this a loser. So this is a sell. If we go back to Aussie Broadband, what's the question again? Oh, exit. So it's all about exit. It's not about entering. It's all about exiting. What's another one I exited? What's another one I exited? I can't remember. I can't remember any more I exited. Yeah, why don't we do this? Step one. I don't know why. I just thought of step one. So I was trading this, 52.5, beautiful run up. And the main reason I exited out of this is I thought the uptrend had come to an end. You can definitely see a beautiful uptrend. Share price rallied significantly back in February 2024. And then you can see the share price really struggling to get above $1.90. Really struggling. That for me was, yeah, take your profits. Then we had a moving average crossover back in November 2024, less than a year ago, and the share price moved into a downtrend. So that's the sort of things I'm looking for. The uptrend's coming to an end. And sometimes the uptrends coming to an end can take a while. For step one, I would say it was still an uptrend here. The uptrend was showing big signs of weaknesses in May 2024. So somewhere in here is the end of the uptrend, but the downtrend didn't really begin until November. So it took a while. So that is what I'm looking for, ends of uptrends. And for a lot of companies I'm trading, let's go to one, Catapult. So what I do is I have these lines. You can see this little line, and this is my manual stop loss. So I will raise these every so often. So for Catapult, probably 450 around that level. And if I see the share price drop below that, hey, it's time to think about selling out of this particular trade. But if it doesn't even get close, like Catapult's not even getting close, not even think about it. So in fact, for Catapult, I don't even look at this chart all that often. Like a lot of these charts I will look at every single day, but some of them I won't. What's another one? Oh, what's one that's getting very close to a sell? Superloop. Yeah, this one, getting close. Beautiful uptrend for a while. So bought this one February 2024. No reason to even think about selling this one. But now I am paying a little bit more attention to this one because they released results and the share price has taken a little bit of a hit. So my sell point for this one is 260. And if it gets below that, now this is why I don't have automatic stop losses, because the share price could fall below and then rally quite quickly. So I want to see confirmation the share price has dropped below that level. So this is what I use most of the times, particularly for my longer term trades. So you do mention short to medium term trades. Okay, so that is what I use, but typically it's 10%. Typically it's 10%. And if it's 10% and a bad reaction from the market in regards to a result, that's absolute rule. Get out. Hopefully I've answered your question. I do explain this in another video that I will be releasing. Okay, Peninsula, IGL, Maida Group, good revenue, CAGR, and good ROC, operating margins under 10%, PO over 30. Thoughts? Let's do it again. Let's do this. Let's have a look at Maida Group. Has been on my radar for a long time, and even though it has been, I've never traded it or bought any shares. Revenue growth, 2 thumbs up, 26.1%. Earnings per share growth, 25.3%. Now, I tend to focus more on revenue growth than earnings per share growth for a few reasons, which I won't get into now. But because they're fairly similar, I don't think we have to dwell on that. EBITDA margins 11.9%, operating margins, no, gross margins 19.3%, operating margins below 10%. Now that's 1 year, 9.2%. Now maybe over a 5-year average, it's above 10%. Return equity, return invested capital, 2 thumbs up. So the only thing maybe going against Maida Group in me calling this company high quality is operating margins. And what I'm going to do now is we'll have a quick look at operating margins. Yeah, they do tend to be below 10% every year. Now, they have been improved. Well, maybe I wouldn't say that. Since 2019, they've been going sideways. So it's the one little thing I would have against Meta Group. But in my rule of 10, I have on occasion dropped the rules to 9 and 8 just to see which companies pop up. And these companies could be some of the more interesting setups, particularly for quickly growing companies who are seeing the operating margins starting to grow. And these are the type of companies you might want to, or I might want to step on board, because they will become high quality in another 3, maybe even next year. So getting ahead of the curve is a good way to say it. So Meta Group will not consider this company to be high quality. You could say maybe quasi high quality. Quasi. Maybe I could say it's quasi high quality. So almost high quality. It's just operating margins. P ratio 30.7, but possibly justifiable by the growth. Dividends have grown at 24% over the last 5 years. Has this company been listed for 5 years? That's extraordinary. Let's have a look at the chart. Oh, it has. It's been listed since September. I just can't believe that. Jeez. By the way, look at that. Share price has gone from $1.17 to $8.50. It's been a wealth winner, this company. So definitely this is a chart of a high quality company. By the way, P ratio of 30. Now, I'm just going to do one other thing. I'm just going to have a look at the P ratio history of this company. Now, there could have been some one-offs that could have distorted P ratio. And the P ratio currently, get rid of operating margins, 31. It's not historically high. Definitely much higher than it was back in 2020, 2021. Not as high as it has been, not as low. If it gets below 20, I think this will be a good buy. And by the way, the chart looks really good. Beautiful breakout back in June. Why didn't this pop up on my radar? I'm not sure. Nice looking chart for Meta Group. Kako Ejgian says, oh, I don't pronounce antimony right. Antimony. Antimony. I'm not going to do this right. I'm just going to pronounce it as I've always pronounced it. I don't know why. Antimony. And I'm sorry I completely botched your name. Keiko Ejgian. Oh, 9-slide guide says, I love the results from Data 3 on Monday. 4% earnings growth, followed by 18% in second half. Technicals are also starting to look appealing. And unassuming non-promotional compounder, very much in the same mold as other gems. Fiducian, Supply Network, Corvests, Vita Life Sciences, and Lycopodium. Well, I do own 3 of those, by the way. And in fact, all 3 of those, smaller, in my super. So I would actually classify Fiducian and Supply Network as high quality. Maybe not Corvests, but I still own it in my super because I do think it has the potential to be a compounder, long-term compounder. Okay, Data 3. I'm going to do the same thing with Data 3 as I've done for some other companies. And then we'll have a look at the chart. Does this satisfy my own high-quality filter? And, the answer to that is no, just because of revenue growth. But earnings per share growth has been above 15%. So what's going on there? Why is revenue dropping, but earnings going up? Now, it could be because of share buybacks, or maybe they made a divestment, which sometimes does happen. In fact, we saw that with Wesfarmers. When they offloaded Coles, if you had a look at the revenue growth, it dropped, but it didn't really. So I'm wondering, that's my first question. Why is revenue dropping, but earnings per share rising? Operating margin 7%, so that's probably another, but return on equity and return on invested capital are really high. That's nice return on equity and return on invested capital. So even though operating margins are fairly low, sort of the same thing as Meta Group, maybe operating margins keeps this from being on my high quality screener, but maybe I could call this quasi-high quality. Quasi-high quality. Let's have a look at the chart for Data 3. Oh, yeah, this one's broken out. In fact, this one broke out. Yeah, this is a breakout. 21st of August, when did they release results? Data 3, and haven't even looked at the results, by the way. Release results was the 21st? 25th. It broke out. Oh, it broke out. Yeah, I'll call that. Yeah, and when they released results, they sort of broke out. It was trying to break out just before, and then beautiful chart for Data 3. Share price has been going sideways for a while. Now, the weekly chart's going to look pretty good. Yeah, the weekly chart looks really good. In fact, I'm wondering, oh, look at that. Putting in the 200-week moving average, you can actually see the share price bouncing off this average a few times now. Not. No, it didn't quite bounce here, but it has been prime buying conditions for this company just based off this little signal. If you consider this company to be high quality, their results. Let's have a quick look at their results. This is another one where I think I did go through fairly quickly. Everything is up. In fact, everything looks pretty good here, just in isolation. Yeah. Expansion of margins. Yeah, no problem with this one at this point in time. I don't like the dividend payout ratio. I would like that to be lower. But that's just me. That is just me. So I have no problems with that result, and the chart looks pretty good. Thank you. 9-slide glide. Capital Seth says, your thoughts on Droneshield. Okay, and actually before that, hi Kneppy, thanks for your video. They are really good. Thank you. I have 2 questions for you. I thought actually you said the questions were really good. That's why I actually did that bit. I thought it said, hi Kneppy, thanks for your video. I have 2 questions for you. They are really good. And I thought that bit was on your questions. And I thought that was really cute. Saying your questions are really good. Anyway, Capital says, your thoughts on Droneshield. For me, this is, what do you call it? For me, this is more of a trading stock. I'm going to say that straight up. This is more of a trading stock. We've seen this in the past. Share price goes on runs and the share price pulls back. So you're going to see the sentiment go positive and negative a lot. So I wouldn't be surprised if the share price drops to below $2, but I wouldn't be surprised to see the share price keep on running up. Yes, so I find it hard to value this company because I just don't know how it's going to look in the future. It's a hard company to judge. So yeah, I think it comes back to your feelings, or why would you invest in this company? Why? What's the reasons for investing in this company? And are you concerned with the valuation of this company? Has there been a little bit too much interest in this company, a little bit too much froth in this company, that sort of thing right now? Because the share price has run up a fair bit in the past 6 months, and has that been justifiable? Maybe, you could say maybe, but that's the one thing I probably would just say. Market cap of this company is like 4 billion, 2.89 billion. So it's a fair bit for a company that's just had a $2 million profit. Was it 2 million? I think it was. Now, they could increase their profit 5,000% in the next year. Oh, that's a half-year results. I do like their title, Surging Revenue and Profitability. Profit after tax, 2.1 billion. But operating cash flow, negative 8.7 million. So I could see, if I did a valuation of Droneshield, I'd get a massive wide range of numbers. So for me, this is more of a trading stock. And this has been a really good trade, even though I wasn't in it, for the last 6 months. But it could be turning around. I don't know. It looks a little bit... They released results, was it the 20th? No, 27th. Oh, and there was an interesting reaction from the market, a lot of volatility in that day. I remember that now. A lot of volatility. Share price opened higher and then dropped during the day. So this could, I wouldn't say it's a Trendkiller event, but it's a little bit weaker. And normally September is a bad month. Would you consider taking profits before the fall? No. No, I would not take, no, I don't. I'm not usually, I would not look at monthly performance, historical monthly performance, and then make decisions based off that, because this could be a month. September could be a really good month. We don't know. It could be, but historically, it's not a good month. Now, I'm going to say this because a lot of people get confused when the Bureau of Meteorology does a climate forecast. So they might say there's a higher chance that this summer period is going to be wetter than normal. They're not saying it's going to be wetter than normal. They're saying there's a greater chance it's going to be wetter than normal because of climate drivers. And a lot of people don't understand that, which gets me really furious. They're not saying it's going to be wetter than normal. They're saying there's a greater chance based off what they're seeing, the climate drivers. So they might be thinking 60% chance is going to be wetter than normal. Then other people say, well, they're just hedging their bets. But it's the future. We don't know the future. We just don't know what's going to happen in September. It could be the worst month ever. And a lot of crashes, by the way, have happened in October. A lot of crashes. I'm thinking, yeah, a lot of crashes happened in October. And now, in saying all this, there was a good article. Watch out. This is from Carl Capalingua. Sorry for botching your name. Market index. Watch out, investors. The ASX 200's record run may be about to implode as September swoon looms. Nice, good article. Yeah. So, yeah, in fact, he mentions here, seasonal analysis is not an oracle. It won't tell you what's about to happen, simply what we might expect based on what has happened in the past. So let's have a look. Seasonality isn't fallible, but it's too useful to ignore. I won't say I'm going to ignore it, but yeah, look at it. All odds to return, average month returns 40 years. September is the only negative month. So through history, because of the last 40 years, we could say this September is going to be a bad month. More than likely, it's going to be a bad month. The only negative month we do see is September, average return of 0.11%. I wonder if he has, and here's a little reliability. It's not that reliable, 50% reliability. And then he goes through the reasons why, etc., etc. Weeklies. I was just wanting to see if he had what's happened every single September. Maybe there was one September that was really, really bad, and all the rest have been positive. Anyway, so for me, I don't look at what historically might happen and make decisions based off that, because it could be completely wrong. So I just use technical analysis and individual companies. That's all I do. Buy, sell, just individual companies. And I won't sell anything just because typically September is a bad month. Is that right, saying typically it's a bad month? Maybe, like over the last 40 years, 15 Septembers have been bad, 25 have been good, but those 15 have been really bad. So typically September is a good month, but when it goes bad, it could be really bad. Trader Hooper, I was a little bit dismissive of this company called IVZ. Announcement worth taking some time over to understand. An amazing deal. I actually did take a little bit of a closer look later on. Invictus Energy. Was this massive strategic deal? Yeah, strategic investor and alliance agreement with some rich something or other. Yeah, rich dude. Who was it? Plans to announce a strategic partnership with Al Mansour Holdings, backed by His Highness Sheikh Mansour bin Jabor bin Jassim Al Thani, a senior member of the Qatar royal family. Yes. And in fact, I saw that and went, ooh. Under the partnership agreements, AMH will acquire 19.9% of Victus and provide up to $500 million in future finance to bring this project to commercial production. So this is oil and gas, I think. Oil and gas, yes. Some nice photos. So Invictus, independent upstream oil and gas company. It sounded actually really good. So thank you for that, Trader Hooper. We'll just have a quick look at the chart. Share price did take off on this news, and understandably so. And look at that. Look at that chart. In fact, that one-day candlestick when they released this news is a really good. Share price went above 10 cents on massive strength. If the share price pulled to 10 cents, that'll be interesting and a nice little buy. What else do we have here? Oh, just acronym Sigma, pro forma EBIT 903 million, minus 30% tax, NPAT 631, ignorant interest cost, market cap 35 billion, so PE ratio 55. I'll just believe you. There was another comment that I didn't mention, Chemist Warehouse, when I was talking about Sigma or something. Well, for me, Sigma is Chemist Warehouse now. May not have the name Chemist Warehouse, but it is Chemist Warehouse. The rest of Sigma is just like, ugh, it's just like crap on the side. You buy into Sigma because of Chemist Warehouse. So if I say Sigma, I'm talking about Chemist Warehouse. That's it. Anyway, so this is like the first time we've got a good look of how Chemist Warehouse is performing. And I'll be honest with you, I think this is, I think in a few years we'll be calling Chemist Warehouse Sigma Healthcare a high quality. I will assume they're going to change their name eventually. Why wouldn't they change the name to Chemist Warehouse? Anyway, so I do think Sigma, but then Chemist Warehouse, when they change the name, will be considered a high quality company. I don't see why it wouldn't be. Anyway, so let's just have a look. NPAT, I'm going to focus on normalized, up 40%, $579 million. And let's just do this. Sigma, what was it, 579? 36 billion. Let's have a look at what you wrote. 36 billion, EBIT, profit. Yeah, so we'll just say P ratio is fairly high, but the company keeps on growing and they're successful expanding overseas, which is what they're doing. Do they mention that? I haven't gone through this, by the way. I do know they're wanting to expand into Asia. Was it Asia? Yeah, 35 new stores in Australia internationally. Ireland and UAE. So it's going to be interesting to see how they expand overseas. This could be really cheap if they're very successful expanding. So I definitely, this company is a company I wouldn't mind owning in the future. So let's just have a look at the chart. I'm pretty sure the share price did pop up. Yeah, share price did pop up on this. I'm not adverse to taking a position in Sigma Healthcare. I'm not averse in doing this because this is the first time I can have a look at the valuation of the company. Okay, Jake Barry just mentioned something about uranium. Two couple of companies, Lotus and Boss Energy. How do you think these are faring up for the next few months? Continue to stagnate or potential to build? Of course, it's all on the back of uranium. So let's have a quick look at uranium. And we'll have a look at Sprott. And this one's looking good. I like uranium chart. It broke out back in June. There was a little bit of a pullback. And then we saw the pullback come to an end and starting to go up again. I do like this chart. Popped up on Friday, don't know why, but pretty big volume coming on that day. Now, Sprott is not exactly the same as the physical uranium, but it's close enough. It's close enough. So let's have a look at, is it Lotus or, yeah, it's Lotus, I'm pretty sure. Yeah, Lotus and Boss Energy. Lotus, this one has potential. This has potential to break out. So, in fact, the share price has been a pretty well-defined downtrend. You can see all these lower highs, and then the lower highs came to an end. All the recent highs have been almost at the same level. So we put sort of a line there. And if it breaks out above that, 2 thumbs up. If it breaks out above that. And the other one was Boss Energy. And yeah, this one, yeah, it's because of what happened recently. It broke below $2, which was an important level. It tried to get above $2 on Friday. It struggled. But again, if the price of uranium goes higher and higher and higher, these companies will benefit. I do prefer Lotus over Boss Energy just because there's massive drop in share price. But whether the question becomes whether that was a reaction from the market, I don't know. I can't tell you. But definitely uranium is looking really interesting. I do like uranium. And that's all I'm going to say. Sensei says, got in at Lumos at 9.5 and now it's 14 cents. The only reason I told you about this company, the only reason I told you isn't because I had some massive knowledge about this company. It's simply because, by the way, I didn't even mention what he said. Another Kneppy discovery that he told many of us about. The only reason I discovered this company is because they put out What was it? I can tell you right now what day it was released. Here it is. 16th of July, share price rose 144.8%. Why did I discover this company? Why did I start talking about it? What day was that? 16th of July? Go back 3 months, 16th of July. Lumos signs pivotal US February DX agreement. And the numbers they gave were quite staggering. 6-year exclusive agreement valued up to 487 million Australian dollars, signed with Phase Scientific for distribution. And if you compare that to the company itself, interesting. So there's still a bit of risk here, but the upside is quite substantial. Anyway, so that is why or how I discovered the company. That's why I mentioned it. And I will be honest with you, I took a position in Lumos almost immediately. That's it. This is a sort of announcement that I will pay a lot of attention to. And if you have a look at the chart for Lumos, now it's been up and down a little bit. So after they released that announcement, share price actually went down 4 days in a row. Found a little bit of support on the 22nd of July at about 6 cents, and then a really good day on the 23rd. And that was the moment I went, yep, it's going to go higher. And in fact, I should have been a little bit more patient with this one, but I bought almost immediately. And a lot of volatility, share price got above 10 cents and fell back. That's okay. And then has rallied again. Nice rally there. Anyway, so that's Lumos Diagnostics. And why did I discover this company? I didn't discover it. It wasn't like I was digging deep in all these small caps. It was just an announcement, one announcement that got my attention. And did it get my attention? It had got the market's attention as well. So thank you for that, Sensei. Oh, a very relevant, a very important comment from Pee-wee. Tax is a fee you pay for being successful. And then Sensei says, never understood why people squirm about paying tax, especially if you hold for 367 days and then sell, etc., etc. This is why I said I'm happy that I have this tax bill, because to have this tax bill, I've done really well. But I also am not happy because there's this money going out of my account. There's money going out of my account. But we cannot function if we don't pay taxes. But I will also say this. I think it's very important that we change the way we tax. I don't think it's very fair that working class people pay the majority of taxes. I do think there has to be tax reform. And I don't like how very wealthy people are getting, complaining about, particularly this is with the increase in taxes on $3 million, above $3 million in super. If you have above $3 million in super, you should not be complaining about taxes on your super. You should not be doing that. We don't need $3 million in super. If you have $3 million, it's enough. It's enough. You should not be complaining. Rich people should not complain about paying taxes. And anyway, so thank you for Pee-wee. Yeah. Okay, VBAD says IDP Education is a barker case. Their share price should have been hammered by the market today. I bet it sinks sharply tomorrow. Let's see if it did sink. We can actually have a look at this one. I would not be surprised if it did, because I think I already know. I think it did drop, because I do think the main reason share price rallied was because of the short squeeze. And I don't think the short squeeze would last all that long. And then possibly the shorters would come back in, go, ooh. So let's have a look. Share price down 4.58%. I thought it might have been down more than that. Anyway, so yeah, I would not be in this one yet. For me, this is not, I have no idea which way it's going to go from here. That's another reason why I have no idea. I want to play the odds. There was a few comments about Telix Pharmaceuticals, etc. In fact, Scott said the announcement was rather positive because it illustrates how much they have going on under the hood. Their work really is groundbreaking. I do believe the market was overreacting. And one of the reasons behind that is because there was a lot of negative sentiment in the company. We already saw, was it markets today, just sold Telix on the simple reason the share price was going down. That's it. Nothing to do with the company. Share price going down, I'm going to sell. Company can be doing really well, but if there's negative sentiment with the chart, it doesn't matter. Share price will keep on dropping until you get to the point where people are now wanting to buy because value, that sort of thing. That FDA is targeting them is still my only concern and why I reckon the market dumped. I'd say also there's a bit of risk, increased risk, that sort of thing, but it's not as concerning as what the market stated. Disappointing though to see a good company getting bogged down. Yes, I agree. And not a reason for me to sell. That's the main way I look at it. Not a reason for me to sell. If you know, this is interesting from Vin Hilly. If you know you've made a lot of capital gains the next financial year, delay doing your tax until the month of May the following year, which is the ATO deadline if you're using a tax agent to complete your taxable income return statement. I've actually got a lot of interesting comments about doing my taxes. There was also another one, interesting one. Yeah, from Fishball. Log on to MyGov. You can pay by installments, interest-free. Interesting. I did not know that. So thank you for all these little tips. Just Acronym also has a tip about my trip. You have First Amendment right to video anything your eyes can see in public. I'm going to do a lot of videoing, but it will be of pretty stuff. Gorgeous stuff. We'll say gorgeous stuff. Fourth Amendment right to privacy and Fifth Amendment right to stay silent. If your rights are violated, lawyer up quickly. Hopefully we won't you in audit the audit. Anyway, so yeah, so by the way, I'm American. I lived there for 8 years. I do know a lot of this stuff. And I lived there for 8 years. I've been over there many times. I've never had, in fact, I would say this, I've never seen a gun over there. People think, oh, guns are everywhere. I've never seen a gun. Well, that's not technically right. Because I do like going to Walmart and seeing all the guns on display. But anyway, no problems with guns over there. Ben Hutchinson mentions some bad news or potentially bad news for West African. I'll say this, potentially, we just don't know at this point in time. Potentially. This is one of the problems of having projects or business in Western Africa is because some of the governments over there can do silly things. So Burkina Faso government wants 50% of their new mine, but we just don't know what it's going to be like. But more than likely, it won't be good. Won't be as good as what we would hope. Fishball also mentions RPM takeover. I think I mentioned this earlier. Hopefully the board will reject it. Hopefully. Typically, when, by the way, yeah, they went to training hot. I should mention this. Not them. Oh, I've got to put the right one in. So they went to training hot. Funny enough, I went to Hot Copper because sometimes, on occasion, there will be rumors about what the takeover bid is priced at. I didn't see it, so I went to Hot Copper, and so many times people just read this first page. That's it. And then someone said, this is about a takeover. And this other person said, oh, no, it could be about a capital return. And then the person said, hey, look at it. It says takeover. And the other person says, oh, I didn't read the second page. All these announcements have second pages. All of them. It's just, I'm just being silly now, but you see this a lot, particularly with new investors. They don't realize there's a second page when you get a trading in hold like this. There's always a second page. Anyway, they mention here indicative proposal from a third party regarding a potential acquisition of the company. I would prefer that they say get lost. I'm going to be honest with you. I think this company has a potential to be significantly bigger in 10 years' time. And I do think if they just accept an acquisition, if it's like double, I think that's a very short-term mentality. This is a reason why I do prefer founder-led companies because they would say get lost. They would say get lost. And by the way, the chart this is a weekly chart. This is brilliant. So I'm hoping they say get lost, but I'm not counting on it. Fishball says, would you sell out of Clinuvel or keep for the long term? Yeah, I'm just keeping mine for the long term. And then Jeffrey Irving says, EV to NPAT under 10 earnings, wildly cheap it appears. Yes. My only concern about Clinuvel is they are one product company, and it does seem like the revenue increase is starting to peter out. But yeah, for me, it's more of a longer term thing, and they are potentially cheap as well. Potentially cheap. I wonder if their results are in fiscal AI. Fiscal AI. Let's have a look. They are. When I say looks like the revenue is starting to peter out, not a lot, but the increases are not as great. In fact, you can see the increases year on year. Revenue change has gone from 105% in 2016, 12.19. We'll go from 2021 onwards, 48%, 36%, 19%, 12.6%, 7.8%. So it's below my 10%. But the company currently, income of 36 million. And you think of income of 36 million, the company has a markup of 30. Markup must be less than 400 million by now. No, it's not, 533. So still fairly cheap for a company that has been growing. So for me, this is too cheap to sell. I still don't know why the share price dropped 15%. This was like a delay reaction. It could be just panic selling. Let's have a look chart for Clinuvel. Now, we have seen this before with this company. The market panics and just sells on a whim. We've seen share price trying to rally. It tried, and then all of a sudden, a bit of selling came in. And I think this is panicking from the market. For me, though, I think this is maybe the last of the panicking. I'm hoping. And Adrian also mentions RPMGlobal. Oh, interesting little mention here. Trader, thanks for the video. Is this the last end of day video we get before you go away, or will we still get one on Monday? I am actually toing and froing about this. I do want to do another video about all my banked videos or pre-recorded videos. So what I might do is a fairly short end of day video on Monday, because I do want to record another video as well. So, and also I don't think we're going to see much news action. Oh, another video on Telix. Looks like they might be close to 200-week moving average. I think you mentioned you were long on Telix, but would there be a point where you would enter into a trading position? Yes, that's the answer to that one. Yes, I'm always, well, maybe not always, but I'm starting to look for more trading potential for companies I own for the long term. So let's have a look at this one for the weekly. I'll get rid of the 25. Yeah, so this one is right on the 200-week moving average. So technically, if I do consider this company to be high quality, fun enough, I probably wouldn't describe Telix as a high quality company, because I still think they have to prove themselves to not only themselves but the market. And they're still they're not really a one product company, but I need to see more products come online. But the share price has dropped the 200-week moving average. So if you do believe this is a high quality company, now's the time to buy. Well, maybe not now, but it's probably good buying. So thank you for that one. And then Vinny Hilly, also another great company, gone. Well, it's not there yet. We're not there yet, but I'm hoping. Were you another one who did? No, Fishball. No. Okay. Louis Don says, what's your thoughts on Contra trading? Is it manageable? This is, I'm pretty sure Contra trading is selling and buying before it's due, or the, what do you call it? Contra trading, selling before it's, buy then sell, or sell then buy multiple securities within a short period, often the same day or the next trade day, and your brokerage offsets the trades. Yeah. For me, this is more like a day trading sort of thing. It's more like day trading. So I did read about this many, many years ago, and I just thought, nah, not for me. Here's an example via Westpac. So Alex buys 5,000 shares worth of BHP on Monday, 5,000 worth of Rio shares on Wednesday. The bank is debited 5,000 for the purchase of BHP shares. Wait there. Wait there. Don't understand. I don't understand this at all. Are you saying it says this is looks like he's sold BHP? Anyway, it just shows you how much I know about contra trading. I'm getting confused by this Westpac example. Settlement marks the official. Yeah, I know what that is. Oh, that's settlement. They're talking about settlement there. Yeah, okay, I understand settlement. What is Contra trading? Buying and selling before the settlement date. Yeah, that's the right. Buying and selling before settlement date. So buy $12,000 worth of BHP, sell 7 worth of Rio. Bank account is debited 5,000. I thought, for some reason, I thought it was the same company. Anyway, yeah, I haven't. I've read about this a long time ago, and I haven't really thought about it since. It just shows you how much I know about it. I was getting confused. Just Acronym says Battle of the Bad: AGL versus ING versus CSL. If you had to choose one, what would it be? CSL, without a doubt. Still think CSL could be a high quality company. I think it probably is, and I would not consider either those other two companies even in the same neighborhood as CSL. So for me, it's easy. CSL. If I had to choose one of these, CSL. Trading could be different, but CSL. He also says, lesson from Eagers Automotive, don't be scared to take an out-of-size position on a dog stock. Yes, in fact, yeah, when it comes to trading, it doesn't matter if it's a dog stock. If the chart looks good, just trade it. Trade the hell out of it. And that was, I wouldn't say that was my mistake with Eagers Automotive, but when this broke out, I still remember it because I was very close to trading this one, very close. It broke out, yeah, it would have been back in almost 1 year ago, October 2024. And I saw it and went, maybe, but what sort of upside could there be for Eagers Automotive? That was my main question. What sort of upside is there or could there be? Is there going to be any sort of massive tailwinds behind the company? And yeah, there have been. In fact, the share price has more than doubled since then. So maybe be less, just play the chart. Maybe that's the lesson. Just play the chart. I saw some good signs with Eagers Automotive and ignored them because I had all these other questions. So don't be scared. And also, very special Steve says margins have been crushed for Bioxyne. They previously guided to 50% gross profit margins, and they're doing 30% EBITDA margins, now guiding 20% EBITDA margins. Compare pressure appearing in the industry. They also mentioned, that's true, but they also mentioned that the expected EBITDA margins to have grown next year. I think they said that. And I think they implied that with their forecast. So this is something you have to be careful with these sort of companies. We saw this with another company in this sort of space, what's it? VIT, is it? Ventura Health. This company had really good financials, and then their margins were crunched because of increased competition. Crunched like crunchy flakes. And the chart, you see that what happened with the chart. This company had, actually, in fact, we could actually see it probably in Fiscal AI. Which one will we look at? Gross margins, operating margins. No, you can't really see with operating margins. No, they were. You can't really, in fact, what we do is we'll eliminate 2020, go back to 2021. So operating margins for Ventura Health were 16.9% in 2023, and then they fell to 4%. That was competitive pressures. So it happened in 1 year. And let's have a look at the chart between 2023, 2024, and you'll see what happened with this chart. Share price was at 60 cents, and it would all the way down to below 10 cents. Competitive pressure. So you do have to be mindful of that in this space, but they were sort of aiming, if I remember correctly, we'll have a quick look at Bioxyne. I'm pretty sure they were forecasting. By the way, this would explain why the share price dropped. I didn't have that quick of a look at it, but they were forecasting. If we have a look, yeah, EBITDA margins, if you calculate that, those margins would be, in fact, I'm going to do the quick maths. Do I have a calculator on this? I don't know where it is. I have calculated my other one. Well, you can't see that. I'm doing very quick maths. We'll do 12.5 divided by 70, and that should be 18% margins, 18% EBITDA margin. So they are expecting it to drop a little bit as well. So I would keep a very close eye on the operating margins for this company, and possibly this could be the end of the growth for Bioxyne, particularly if the market thinks the margins are going to be crunched even further. That could be the end of the rise in the share price, and this could be the day. This could be the day. So thank you for that. Very special, Steve. Now, if you have any other questions, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.